currency traders? This is Rob Reinhold. I will be flying solo this week, and this is the Currency Room. What a week. We had a ton of news, so let's just jump right into it. In this session, we're going to be talking about what happened this week. Like I said, lots of news, even a surprise rate cut by the Swiss National Bank. We're going to take a look at all the charts. We're going to see which ones are the strongest, which ones are the weakest, and then we always pair those up to look for our trading opportunities for the week.
Disclaimer. This video was created for professional Forex and crypto traders. Maverick Currencies is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional Forex and currency trader for Maverick, click the apply button in the video description. Let's get ready for next week.
First off, we did have a breakout in equities, and we'll take a look at the charts. It was a decent breakout. It was a good breakout, but there really wasn't any oomph behind it. Understand, we are definitely in like later stages, more mature kind of market to where we're still likely going higher, but it's not going to be at the same pace. So I don't want to say that it's, a top here. We have no idea where the top is, but we do have to understand where we are, where we've been. Consolidation is much more likely than continued, another 5, 10, 15, 20%. There's probably consolidation more than likely. We heard from a ton of central banks, And let's talk about the FOMC right now. They had two things to say. They upgraded their GDP and inflation forecasts to where they're going to be higher than expected, so stronger economic growth. And they also kept 3 rate cuts on the table. The market really liked that. The market was worried that they were going to take one of those back. And for right now, the 3 rate cuts are still on the table. We heard from a ton of central banks, but probably the biggest surprise was, actually we had a couple surprises, but let's talk about the Swiss National Bank. They cut rates out of nowhere. Nobody was expecting it. The Swiss franc has been weak lately, and it actually had a big move down on Thursday. So we've liked the Swiss franc short. This one caught us by surprise as well. But what you're going to find is that the news tends to go along with trends. So when things are trending higher, it's very common that good news comes out on them. And when things are trending lower, it's common that bad news comes out because, again, there's a reason why things are going lower. Let's talk about some of the other central bank announcements that went this week. And I don't want to spend too long on this because we could spend 30 minutes on this alone, but I'm just going to talk about real quick. RBA kept rates where they were. They were a little bit more hawkish than the market thought. We got the first interest rate hike from the Bank of Japan since 2007. So 17 years. But look, they went from negative 0.1 to positive 0.1. It's still 0. It doesn't really matter whatsoever. We already talked about the FOMC. I do want to point out this Aussie employment report was absolutely stunning. This was a killer report, and the Aussie was one of the strongest currencies because of it. And we've seen that Aussie pick up quite a bit. We had this surprise rate cut from the Swiss National Bank. You can see from 175 to 1.5. It's expected that most central banks will start to cut in the second quarter of the year, second half of the year. But the SNB said, hey, we're going to go first and get this going. We also heard from the Bank of England, and as expected, they didn't do anything, but they were more dovish than the market expected, and we did see the pound fall quite a bit on Thursday from this news. As you can see, a ton of data and a ton of central bank movement. And we did have some really good moves in currency this week. The currency trade over the last 3 to 4 weeks hasn't been great. This week was absolutely much better than we've seen. Let's take a look at the numbers real quick. S&P and the VT, the World Index. So we were up around 2% for equities on the week. We're going to talk a lot about crypto here because it's been where I've been looking more than Forex lately, and the bounce just did not materialize in crypto. So we're going to be very, very diligent in looking through crypto because I think that's a big story and I want to cover it because For people still looking for that crypto bounce, it didn't happen. And so I think you got to stop looking for it because it's going to be painful if it doesn't happen. Let's take a look at this S&P chart. And we got this high base breakout. We had been basing for, about 2.5, 3 weeks, and we got the breakout. And then we got a gap up. And you can see these 2 days, they weren't stellar days. They were still up. We're still up from the base. But this is what I was saying. We can't expect huge moves. I mean, look at what we've had over the last month or two. We've moved higher, but not like we moved higher in December and January and February. I mean, this is choppy price action, very, very slow, but steadily moving higher. Let's take a look at the numbers of Forex. And these are decent numbers here. So, and again, we're going to look at charts. You're going to see that pretty much every currency has a long lower or upper shadow by the end of the week. So what this means is the moves were bigger than this, and then we had big retracements at the end of the week. I love that price action. I'm going to be pointing that out to you and showing you what currencies I like the best. The dollar was the best currency, and again, no surprise there with the FOMC. The CAD was piggybacking off of dollar strength. The yen was weak, but look, you're going to see in the charts, the yen had a huge bounce on Friday. We love that. So earlier in the week, this yen was down 1.7% and then had a 1% bounce back. So big moves. Same thing with Swiss franc. Swiss franc at one point was down about 1.5%, had a big bounce up on Friday. We are licking our chops with these bear rallies for these currencies. Euro has been my favorite currency to play, and it just hasn't had oomph to it. It's been a decent trade on the long side, but definitely not a runner like we've seen some other currencies do. Here's crypto. Bitcoin, Ethereum had the big pullbacks, but they also had the big runs. And you can see Bitcoin Cash somehow eked out a positive week, and Litecoin down 3.5%. We're going to be looking at these charts. We're going to be looking at them at the basket area, and we're also going to be looking at them on an individual basis. Let's take a look at bonds here. And you can see that we did not break out of this resistance. If we break out of 4.35 on the 10-year, it's going to be a little bit of a headwind for equities, and I figured there was going to be a decent pullback. You can see here, it turned right around and went straight down after the Fed meeting, where they said they're going to basically keep the 3 rate cuts on the table. These are range bound, so I think you have to look at the dollar. Look, the dollar chart looks good, but I think you've got to look at it and say, hey, bonds aren't screaming higher. They're actually coming off of a resistance area. For me, dollar is not my favorite pick for the week on the long side. Let's take a look at the crypto basket. Now, this is the basket of Bitcoin, Bitcoin Cash, Ethereum, and Litecoin all put together in a basket. And you can see we had several attempts at a bounce. We had an attempt here at a bounce, failed. We had an attempt here at a bounce, and failed. It's not the kind of price action you like to see. We like to see pullbacks and then bounces that hold and have continuation after them. That's the kind of moves you like to see. This is telling you that there's more to come on pullbacks. Next week is a much more quiet week, and really the only thing that I think is going to be all that important. Well, the Aussie CPI is definitely going to be something that needs to be watched. On Tuesday, Canadian GDP, if you're playing the CAD, you should definitely be watching this. But I think this core PCE price index is the most important report of the week. This is the Fed's favorite inflation indicator. And if it's hotter than expected, you might see people taking one of those rate cuts off their bets on what the Fed does this year. So this week, a quieter week for sure. Let's talk about equities. They're bullish, but we have to understand where we are. We had a massive rally over the last 5 months, a record-setting rally that usually only happens after we have deep recessions. We had this rally just kind of out of nowhere, not off of a deep recession. It probably has a lot of consolidation to do. So equity markets, we remain bullish, but we have to be realistic with how much higher they're likely to go. We have a few central bank speeches this week, and really that Friday core PCE price index is going to be the important one. So let's go through all the charts. Let's do every single currency, +3 to -3. Let's start with the cryptos. Let's take a look at Bitcoin first. And you can see that we had again, same thing here. We had an attempt of a rally, failed, attempt of a rally, failed. All that tells me is we're still in this pullback. How deep does it go? Does it go all the way to the 50? Very, very possible. I think that's probably where we're headed to. And if we can bounce off that and then break out of the top of this little channel, I think this is going to be the right place to buy cryptos. Until that happens, I'm just not interested. I'm not interested whatsoever. So you can see it's a 0 on trend score, 0 on velocity score. We come over here to Bitcoin Cash. It held a bounce. As you can see, it held that bounce much better, but there was no follow through. There's no follow through to the upside. So there's no reason at all to get excited whatsoever about any of these cryptos. They are still having moves down. Until we get confirmed moves up, as you can see, Ethereum made it all the way down to its 50-day moving average, tried to put a bounce together, and they just couldn't handle it. It would not surprise me at all if Ethereum broke through the 50-day moving average, which would be a bearish signal on Ethereum over the medium to long term. Litecoin also came down to its 50, tried to put together a bounce, and you can see just it's not there yet. It's not there yet. So cryptos, I am on the sideline for sure, waiting for some better technicals before I dive back in there. Forex, though, we've got some good looking charts in Forex, and take a look at this dollar. This dollar broke out. This dollar broke out on Friday out of this long channel here. Okay, so it's a +3. It's a +3 and a +2, but I can't get so excited about it. All the things that typically push dollar higher, they're not there. So again, I'm still bullish, and I might look to play the dollar bullish. But the question is there something better? Is there something better out there that I can play that has a little bit more substance behind it? Here's the yen, and I love this chart. So we got the interest rate hike that everyone had been waiting for. Everyone had been buying into this hype of the interest rate hike. They went from -0.1 to +0.1, and you can see that nobody was impressed. So we're all the way back down to where we were when we started the run to get excited. That has happened. That news has happened, and it didn't have any long-term effects on the yen. So I think we can go right back to the short side. I love these last 2 days. I did the Wednesday video, and I said, look, we love yen, but it's got to bounce. We can't be chasing it. We got the bounce. We're just waiting for it to turn back over. For me, yen is a short, but look at the velocity score. It's bouncing right now. It's still bouncing. We have to wait for it to stop bouncing. And we see the same thing with the Swiss franc. We were basing, and we broke on the announcement, and now we're getting a bounce. We're licking our chops. We're licking our chops, but it is still bouncing at the moment. So maybe Monday, maybe Tuesday, maybe Wednesday, but these are our favorite trades for the week for sure. We're just wondering, what do you pair it up with? Dollar looked good, and euro here looks good. But I've got to say the same thing about euro, is that it broke out, but it broke out with no oomph. I mean, look at that. We broke out of this resistance, and we didn't really do anything. So for me, I'm just waiting for them to show some oomph. And if you take a look down here at a 4-hour chart, you can see we are building a base. So a breakout of a base, I think, could be a really good time to go long once it breaks out of this base. So dollar and euro look good. The pound had this breakout, and then the Bank of England pretty much killed it. It's still bullish. You could still look to trade pound. It's just not my favorite. It's not on the top of my list, but it's definitely a tradable currency at a +2. And coming here over to the CAD, here we see a currency that actually has some nice momentum to it. Everything we've seen the breakout has kind of been on some low energy, but the CAD has really rocketed back up. It went from a really nasty chart pattern to broke up here, and now we're up against this resistance here. I expect we need to base here, but for me, CAD looks good. CAD looks really good here. I just needed to clear out of this range. We'll take a look at some CAD crosses for sure, as this looks like a good trade to me. Aussie broke out nicely, and then you can see long shadows on everything. So we got reversals at the end of the week. So the things that were weak all week had bounces at the end of it. The things that were strong all week had pullbacks at the end of it. I really like that price action. So I'm really looking to identify where is my strength. And for me, Aussie with the pullback, if it holds this area and can put together a bounce, I really like Aussie on the long side here as well. But the Kiwi is marching to the beat of its own drum, and that march is lower. This is just a nasty chart pattern. We've been negative on Kiwi for, I don't know, a couple weeks at least, and it continues to move down. Kiwi is absolutely still a shortable currency, but we do like that Swiss franc and that yen a little bit better. So here's where we stack up. This is the trend score. And you can see here, we went about a month ago where everything was in the middle. Everything was +1 to -1. And we said, hey, this isn't a good environment. And back then, only the cryptos were moving. We said, trade the cryptos. Now, take a look at it. The cryptos are going nowhere, but Forex is trending. It's all trending. The strong and the weak. We love to see this kind of trend score. But then when we go into the velocity score, this is what's moving now. And you can see we do have a lot of stuff in the middle. We got a lot of stuff in the middle of what's moving now. Right now, we're getting bounces on that yen. I really still, again, like the yen on the short side. We're getting bounces on the Swiss franc. The Kiwi is remaining weak. So we're going to be focusing here on basically 4 currencies. On the long side, Aussie and CAD. And on the short side, it's going to be Swiss franc and yen. So let's jump into those charts and let's take a look at some possible entry points and some possible targets on those crosses. Would having more trading capital help you meet your trading goals? Maverick Currencies is the oldest US-based Forex and crypto prop firm. We fund traders just like you with 5- and 6-figure accounts where you keep 70 to 80% of profits. Click the apply link on the top right of this video to start the process. This will take you to a 4-minute video that explains the trader position, and you can read a list of FAQs that answer pretty much all the basic questions you have. After that, if you're interested, fill out an application, and then you'll watch the full-length recruiting video and schedule an interview with our recruiters. Are you our next trader? Whenever you have the question of, okay, you've isolated 2 currencies that you think are going to be strong, and then you say, okay, well, we got Aussie and CAD. Which one is better? This is where you simply pair them up. So pair up Aussie CAD. And this will tell you which one is better. So on a daily chart, you can see that, okay, last week the Aussie, sorry, this is a weekly chart, my bad, daily chart. So you can see that the Aussie actually has been pulling back and the CAD has been stronger. Over the last couple of days, you can see it's been pretty much flat where it started the week at. This is not telling me, again, on a daily chart, that one is stronger than the other. Obviously, like back here, you get a really nice, okay, it's clear that the Aussie is stronger than the CAD. In here, it's pretty mixed. But this is where we can go down into lower time frames and try to get a better idea of, okay, where is this going? And if I was to look at this over, again, a 4-hour time frame, during this time frame, it's been more weak than strong. Other than this little rally here, it's been more weak than strong, which is telling me that the Aussie is weaker than the CAD. So if the Aussie CAD cross is going down, it means that the CAD is the stronger one. Then we have to ask the question, well, what about Swiss franc against yen. We like both of them short. Which one is the better short? And this is where you come to a daily chart and you can see they've been pretty much the same on a longer term basis. Yes, over the last couple of weeks, Swiss franc has been stronger, but then lately, Swiss franc has been weaker. We're taking a look, okay, where do we want to be? I'm going to have to say the same thing here, is that over the last 2 or 3 weeks, it's been up more than down, which tells me the Swiss franc has been stronger than the yen for the most part. So that tells me that yen is my preferred short. So I'm going to take my preferred long, CAD, against my preferred yen. This is going to be my number one pick for the week. This is what I'm looking at. And if you take a look at a daily chart, you can see we had a nice breakout to a new swing high. We love to see that. We're pulling back into this area. I would love to see an early stabilization next week where we get maybe like, a hammer candle or something here and then some green candles. I would love to buy this pullback here. Could we pull back a little deeper? Yes, we could pull back to this 110.90 area. And maybe by then these moving averages will have caught up. But I think if we get some early bouncing, some early reversal signs, first part of next week, I like Aussie yen here, anywhere between like 110.90 and 111.40. This is just a prime area for a bounce. But as you can see, there is no bounce happening at the moment. It's still moving lower. So you can't buy these things when they're moving lower because that's a good way to get yourself in the hole. We want to buy things when they're turning and starting to move higher. So we do like CAD yen here. Let's go ahead and take a look at Aussie yen. And we can see it's very similar. Very similar. We made a new swing high. We had this long-legged doji here. We had a reversal candle to the downside. So we're just asking the question, okay, where is this going to bottom out? There is some support right around here. We'll see if it holds this. If it doesn't hold that, then I think we probably are going a little deeper. So the area we're really looking for is, we're looking for 98.80 to 98.60. Somewhere in here, we should see some support. If we don't see it there, then we're going to probably see it down at about 98. So as you can see, I got 2 levels here. It is looking like it wants to hold this level. So on Friday here, it's holding this level. If we can get a bounce on Sunday or Monday, I'm all in. I'm all in on this one. I like this trade, and we'll see where it goes. So these are my 2 favorite trades here, Aussie yen, CAD yen. But let's go ahead and just take a look at like CAD Swiss franc, because the Swiss franc could be a weak currency next week as well. Look at this breakout, just a beautiful breakout that we saw here. And now we're pulling back. Yeah. First area to look for some support is in the 65-75 area. And then if we go deeper than that, probably down here in the 65-60 area. So somewhere in this area, I need to see reversal candles, dojis, hammers, bullish engulfing candles, something that's showing me that the momentum has changed, because the momentum is to the downside here. You can see all the momentum at the moment is lower. You do not want to buy it while it's moving lower. I know people think, oh, but if I get in now while it's going lower, when it bounces, I'll be great. Well, guess what? We don't know, first of all, that it is going to bounce. We don't know when it's going to bounce. So why don't you just wait for the bounce? And if it doesn't bounce, then you just say, oh, I'm not even going to lose any money on this because I never traded it. We want to wait for those bounces. We want to be on the train going the right direction, not hoping that it turns around. So to wrap this up, we really like these yen and franc bear rallies. We think that is going to be the right trade this week. Euro, CAD, dollar, looking for strength there. Weak. Swiss franc yen we like, but that Kiwi could just keep sliding. There is no end to that Kiwi. It will end eventually, but it doesn't look like it is going to end soon. Everyone have a great weekend, and let's go make some pips this week.